we ask questions because we don't know the answer ourselves.
When it comes to the difference, like between a mortgage broker and a
Mortgage bank?
and a mortgage bank.
Great question.
Well, in general, you could be a mortgage bank and still broker.
Absolutely, we do.
And okay, so
I actually tell people that.
why doesn't everybody do it? In other words, like
brokers, people, guys who, gals, whoever who want to be brokers, they want a certain amount of independence. They don't answer to anybody else, right? It's their own business. They're really their own business. They are independent businesses, brokers, and so they find, different companies they can broker their loan to, like match overlays or whatever. Right? And so, they can set their own comp. Nobody's controlling it. Some are like that. I think it's interesting. When the market collapsed, a lot of brokers went away. Now they're starting to become more and more brokers, which surprised me because the compliance issues and everything with TRID and all that, you really have to, have stuff, you gotta be able to support your operation.
well, it seems to be a huge benefit to having stuff in-house as well as being able to go out. Like just a broker themselves would seem to have a huge leg down on somebody like you that can do both.
Well, yes, I guess, it depends on the broker. The broker has good relationships with their lenders. They get stuff done in a timely manner, then you find so I think that's the case by case. As far as brokering stuff, I don't like the broker stuff because I don't have control over it, right? That's for the company. And so we only do those for products that we just don't do sort of off-the-wall stuff. Because, there are companies out there that do stuff, no income, just assets. I mean, it's almost like back in 2004, 5, and 6.
Yeah.
Not quite. A lot more down payment required and stuff like that. And of course, rates are much, much higher. But it's crazy what some of these brokers will do.
But like for example, in the case of
we
Wells Fargo and Bank of America, do they have a full portfolio in-house? Because they're not allowed to fish out, right?
Banks are the worst ones to try to get stuff done with an exception of this. They can do stuff and keep on their books if they so choose.
Okay.
Right? So let's say you have a client who's got a lot of net worth and is a big banking client. Well, you might make an exception for him maybe that you might not for somebody else, and you just carry that on your books. See, banks don't like carrying loans on their books. Why?
It's like
It's less money they can loan out. Why do you think Fannie and Freddie were created was to take mortgages off the bank's books so they could lend more money? It was basically churning. Because what they do, of course, they package it up into securities and sell it on Wall Street. That's what allows the money to keep being available at the rates we have them at. Otherwise, you wouldn't see that.
Yeah.
And they have to abide by a certain ratio too, right?
Yes.
So
as far as deposits and loans, absolutely.
So, but do they pretty much? How do I say this? Because, like, for example, when you do a loan, right? You're finding the bank, but they're going to sell it anyway most of the time, right? Or are you finding the bank that's going to keep it?
What do you mean? When I do a loan?
When you do a mortgage, yeah. You're more often than not, are the people that you guys are working with, you guys are just going to sell it right away.
Okay, let me tell you how my bank works. We have two ways we can do a regular conventional loan or a FHA or a VA. We can do a loan and lock it where it's going to go into a pool where we sell off to investors. Different investors will take the loan, right? When you do that, and I actually was going to kind of touch on this, but it's really not that important. But when you do that, there's overlays and stuff, right? These different lenders can have overlays. And so the way ours is done, we call it our CF30 product. All the overlays from all the banks, all the investors, whoever, are kind of put into this one guideline. So as long as you meet that, there's some investor that we can sell it to. We also sell directly to Fannie and Freddie and Ginnie Mae, which takes FHA and VA loans. We're so big and we have such a reputation. We went from originally when I was at Pinnacle Capital Mortgage, I was telling Fred, right? Yeah, Fred earlier, that we got bought out by Blackstone out of Wall Street, and they bought a number of mortgage companies. Ours was the biggest, Pinnacle Capital, and they formed Finance of America. Before we got bought out, if we went directly to Fannie and Freddie, the rate was 25 basis points higher, not a quarter point, but 25 basis points. In other words, a $200,000 loan would cost the borrower $500 more to go there. Okay, whether it was a fee or just the rate was higher or less credit. before we merged, it went to 10 basis points. Now it's flat on Fannie Mae and Freddie Mac. In other words, I can go Fannie and Freddie, and it costs my borrower the same amount as if I put it in the pool. Why the hell would I ever go there when they got overlays? And we underwrite right now basically to DU guidelines and LP guidelines. I look at what the doc requirements are. That's what I put in the file. Maybe the underwriter might want something more because of something, they don't like it or whatever. But God, it makes life so much easier for us. If I sell FHA, if I do a FHA or VA and I go to Ginnie Mae, it's only 10 basis points higher. So a $200,000 loan is $200. I typically just do that because it's that much easier. I don't have to get tax transcripts on my files on any of them. I don't need tax transcripts. You go to investors, they want that in the file when you close the loan. And there's been times in the past when those weren't available on the IRS website for whatever reason. So I love the company I work for. I really do. I mean, it's a big company. Some things, we start and get a little bit pickier on from an operations standpoint. But on the flip side, we're coming up with products that most don't even have. We have our own 12 and 24-month bank statement loans, for example. We do another one where, actually I think Fannie Mae allows that. If we do a cash out refinance, but it's to pay off student loans, the pricing is done like a regular refinance, not even a cash out. So there's things we can do. Well, I'll give you an example. I did a loan for a guy who, and this was a 3 years ago now, but this is a similar example of other ones I've done. He came back to U.S. after being back in South Africa for 10 years. He's native, he's from South Africa. But when he'd been here 10 years before, he had a couple of credit cards. One he kept active while he was gone. So he had one trade line for the last 10 years. He comes back, his banks at B of A, they turn him down. No, you need 3 trade lines for at least a year. I go, I don't think Fannie Mae's going to require that. So I ran DU, approval. I said, okay. And then to top it off, we can't get W-2s and tax returns and have them available. So I went to my underwriting manager and we ended up talking to Fannie Mae. I said, what if I get a record of all the money he made from this company? Because in Africa he was paid as basically like a contractor. Here he was paid direct, right? And he was making, I think, more money, or maybe less, but it was direct. But anyway, they accepted that history of his income. So yeah, it was, I know you already have one of those. Oh, God, no. So it's neat to be with a company where we'll just follow those guidelines directly, without overlays. It's pretty neat.
So do you have in-house underwriting then?
Oh, absolutely. Yeah, in fact, what they try to do is they try to give us specific underwriters so we get used to them, they get used to us. So we have one main one who's amazing. She's awesome. Rare do I ever go back to her and say, I don't like that condition. And when I do, I usually have my ducks in a row, and usually I win, but other times she's going, this is why, and I'm like, okay, I get it, we'll get that, don't worry about it.
But you know what to expect when you work with someone that close and often.
Right, and our overflow gal, that usually gets our overflow, we were using her before we moved, kind of, and she's just mad that she's not getting our files anymore much, because we're so good. Seriously, and we're going to talk about it. Okay, so let me back up here. Okay. Well, hello, lady. Glad you could join us. Everybody knows, right? 47 years.
Hey.
I don't know how you put up with them that long, but that's okay.
No, it takes a special woman.
No one can put up with me for 47 years. All right. So
I didn't even know she was that old.
What?
I was just thinking me either. I'm just
Well, I
shaking
mean,
my
I
head.
did 12 and I did 12 and I did 16. Well, we were together 20, but does that work? That's still not even near that.
Still, that is quite.
All right.
Thank you, Keith, for
So,
coming tonight.
oh no, it's my pleasure. So I'm Keith Cardillo, obviously, and company. Just a little background. I came out of high school, and 9 days after my 18th birthday, I was in boot camp for the U.S. Navy, and I was on what we call a nuclear operations guy. So we're the people who ran the engine rooms. I was on submarines and surface ships, but I spent 12 years in the Navy, and then when I got out of the service in October of '84, I came out here. And I've been here since November of '84, and I started working at the Palo Verde Nuclear Plant in operations. Makes sense, right? While I was there, I got a degree in finance. I don't know why, it just was something to do. I always wondered why I didn't get a degree out of high school, because I was in the Navy, that made a lot of sense. But I spent 18 years total at APS. I took that degree and leveraged it to get away from the nuclear plant and all that shift work I was doing. And went to corporate APS downtown Phoenix for 6 more years. And then in October 2002, a friend of mine had left that I knew at the plant a year before to go into mortgage business. I thought he was out of his freaking mind, especially when he told me he was full commission. I'm like, wait a minute, I've been getting a paycheck twice a month for 30 years. You only go commission? Well, truth be told, they came up with a voluntary severance package, and my manager's job was going to probably go away because I was involved in deregulation, and some of you are old enough to remember Enron imploded, and deregulation was going away, and I went to my VP and said, you're not going to need my group anymore. We were a small group called Competitive Intelligence, and right about that time, my buddy's bugging me again. All of a sudden, they come with voluntary severance. I'm like, can I volunteer? So I left after 18 years with 40 weeks of full pay, which is a great way to start out a commission-based business. So I was pretty lucky. I got 4 kids, 2 daughters, and much younger identical twin boys. Yeah, that means 4, right? Because they're identical twins usually means there's 2 of them. You can actually have identical triplets, you know that?
Yes.
It's incredibly
Yes.
rare where one
Yes.
of the eggs will split again.
Yep,
It's crazy.
there's 3 girls that are just.
Really? Yeah, it's nuts. And I got 4 grandchildren, and I won't say how old my oldest is. And I moved here, like I said, in 1984. So that's a little bit about me.
Did you hear about that submarine they just found?
You're talking about the French one, isn't it? Was it a French one they
I
found?
thought it was a US one. It's down like 37,000 feet or something.
Oh, really? I guess maybe I didn't hear that. Interesting.
Wow.
So, okay, so what we're going to talk about today. So, Josh, actually, I think Charlotte asked me if I could do some training. Josh was too chicken. Asked me if I could do some training on basically the loan process and how it impacts, realtors. So I've never done this before, not this particular topic like this. I mean, I educate realtors all the time in the 17 years almost I've been doing this, especially newer agents. I always like to meet with them and talk about how we can help each other be successful because it's a team effort. The only one we're missing, of course, besides the clients, is title. Right? Title is the other key part of all this. So I'm going to talk about the pre-qualification process. We're going to go over the pre-qual form that you get from us, which I don't know if you even look at, but we're going to go over it. It's amazing the questions I'll get sometimes on those things. Like, did you read it? Arizona purchase contract. I want to go over that because I highlighted some areas that are specific to lending, and I'd like to just go over them real quick. I know this, I have about an hour and a half, so I'm going to try to go through all this stuff. Let's kind of hold maybe much of the questions till the end because I think a lot of things I've covered you'll get kind of answers to, and if you want to just make a quick note or give me a quick comment, and I'll write it down so I don't forget. And then we're going to talk about the loan process, a little bit of the timeline once under contract, and we're going to go over the loan status update a little bit. Again, I'm not sure how much agents actually look at that. I have a tendency when I send out the LSUs every week, when I send it out in an email, I'll go, okay, well, we just got underwriting done and the appraisal's in or whatever, even though it's on the freaking, status update. I usually like to give them the major thing that might have occurred since the last time I gave you an update on that probably 2 days ago.
We have a system called Pipeline, and it makes you check it out.
Oh, cool.
Yes.
And I like the ones that say, well, my broker says I need the LSU. Just take responsibility and tell me you want it. Don't blame your broker. I don't mind doing them. I really don't.
I think it's called a transaction coordinator.
Well, that too. Yeah.
Yeah.
All right.
Win the listing agent.
Yeah, some. I should be able to hit it anyways. There it goes. Stop it. I'm sorry. Let me put this on. Oh, my biking buddies. All right. Who's this guy outside?
We had a huge leak a couple of weeks ago, and we were actually out without water, so he's still fixing it.
He's fixing.
I was wondering if like one of your
Oh, he's
agents was
fixing
coming
more?
and he was like on the phone
Okay.
or
The
something.
light up above had fallen, and so
Okay.
we have light out there.
Yeah, he's the maintenance
Oh,
guy.
okay.
It's Clark's.
Yeah.
Okay, so pre-qualification process. What happens? All right, first of all, somebody comes to you and they want to look at homes, and you go, well, let's forget about the fact a lot of agents want to take them out before they pre-qualify to establish a connection. I get that, okay, and I understand that. But they haven't gotten to pre-qual yet, right? You want to get pre-qual. Why? Why do we want clients pre-qual before they start looking at homes?
So we don't waste
So
our
they
time.
can go.
No, wrong answer.
Oh.
Oh no, don't ever tell them that. I never tell a client when I'm talking about doing a pre-qual, one of the reasons is you don't want to waste a realtor's time. I never tell them that, because they can care less about your time. Isn't that true? Most of them don't care. Some do, but most don't.
No, we're
So
free.
you know where to start looking.
You know where to start looking. What else?
When I walk into a house, you know, that potential seller wants to know if my potential buyer is at a place to buy that house.
Yeah, that's not a good
So-
reason. Yeah, anything
How
else?
much, how much they could afford, set expectations. Nothing's worse than a disappointed person too. When
There's
it's
two
like-
parts to that.
Yeah.
You said what they can afford. I like to say, what
Payments.
are they willing to have as a payment,
Yeah.
right? Because a lot of times they can afford more, but that's not what they want
True.
to spend. So I tell clients it's important to get pre-qual for several reasons. One is, because I tell them, I always ask these two questions. Have you thought about a payment you're comfortable with and how much you can and willing to put down? You tell me those two things, I give you an approximate purchase price range. I'll throw 50, 75 bucks in for an HOA. You know, I can kind of throw in, you know, factors for taxes and insurance. I even have an Excel spreadsheet. I put in purchase price, percent down, and interest rate, bam, it populates everything. Because I have little formulas in there for it. This gets me pretty close. So one is, so they know what range we're looking at to satisfy their comfort zone for payment. The other one is, to what you said before too, you don't want to go fall in love with a house and then find out you can't afford it. You can't even qualify, even if you wanted to have that kind of a payment. And the third thing is,
Building relationship with you.
well, really? Okay. And the third thing is, I tell them, they don't want to waste their time looking for at homes they cannot qualify for. I never say the agent's time, their time. Their time's valuable. So, but you're right, we don't want them to waste anybody's time. But you always got to appeal, as we all know, and I know you know that too, to their sense of their time's valuable. All right, so I have somebody come to me, and we have a real robust online application system now. I love it. It's kind of a question and answer thing, right? Have you been employed, you know, this residence for more than 2 years? No. Oh, opens up another prior residence you got to now fill out. Have you been at this job for 2 years? Nope. Oh, there's your other job you got to put in, right? So it only shows them things as they need to.
Is it all?
So yes, absolutely. So even in my email signature, it says apply here or apply now, and boom, it clicks in and it says, what are you doing? A refinance? You're doing a purchase, and it goes right through it. It's really slick. And then I get emails when someone starts the process. I get emails when they've given consent to pull credit, so I know they're pretty much done by then. I can just pop on it. Everything's ready to go. If they did a decent job filling it out, I can pull credit right there. And the system will actually tell them basic documentation they need based on what they filled out. So for example, if they say you're self-employed, it'll tell them they need taxes. Right? If they're not, they won't. But I always give my own personal list. And I can even do that needs list from inside the software, which is really cool too. And the software allows them to upload their documents into the system securely. So it's pretty robust. So, loan application, then I do a credit inquiry. Then I say, okay, here's the documents I need. And usually when I'm sending that link, I go through a quick conversation of about half a dozen questions. When I go, you know, what kind of payment you're comfortable with, how much can you put down? I'll ask them, you know, what are you doing, buying a primary investment, whatever. For example, I'll ask, have you got to meet your credit events in the past, you know, bankruptcy, foreclosures, short sales, are you paying out money or child support, are you getting it? Are you a veteran? That's one of my last questions, because a lot of veterans don't even think about VA loans. Are you paid hourly, salary, commission, whatever? So it's about half a dozen questions, and what it does, it gives me an idea of the type of documentation I need from that borrower. And so that's what I then make up my needs list from. Okay? Term loan program. So once I get the documentation, once I have credit pulled, and I got debt to income ratios in there, if they're self-employed, understand this, I will never do a pre-qual, well, I shouldn't say that. We're going to go over the pre-qual form. I will not give a pre-qual for a self-employed borrower. I got it, let me back up again. I can do a pre-qual for a self-employed borrower based on what they tell me their income is, but as you probably all know on that pre-qual form, I'm not going to check off I had tax returns or anything. I personally will tell a client who's self-employed I cannot do a pre-qual for them without their tax returns. You will not get a pre-qual from me. I know what the form says, but I will not do them without tax returns. I won't. Because I have no freaking idea what kind of income these people have. Whatever they tell me is wrong. Maybe higher, maybe lower, but it's not going to be right. It's just not. Okay? Because we do an analysis on self-employment. So term and loan programs, right? So let's say I get somebody come to me, he's got a 675 FICO score. Am I going to do a conventional loan, or am I going to do an FHA loan if they want to be low down? What if it's at 690? What if it's 705? What if it's 780? almost like I'm doing a 3% down conventional loan. But if it's in between, I'm gonna run DU, automated underwriting programs. Most loan officers should know how to run these things. It's the same program the underwriter's gonna run.
What does DU stand for?
I'm sorry, desktop underwriter.
Desktop underwriter. Okay.
And Freddie Mac's used to be called loan prospector, now it's called something else, but something, but it's just, I can't get rid of that old name, loan prospector. So it's the same programs that the underwriters actually run to determine qualifications and what the requirements are. So if you do those things on your pre-quals, now, I'm not gonna lie to you, do I do that in every single pre-qual? No, if I got somebody's putting 30% down, 20% down, whatever, he's got 800 FICO score, he's got plenty of reserves, his debt to income ratio is 30%, I don't need to run desktop underwriter. Does that make sense?
Yeah.
Right? Most times I run it anyway because it's that quick. So term and loan programs, so now I got to discuss with the borrower what they might want to do so I can tell the agent, right, what kind of offer you're going to put in. You're going to put in for an FHA, you're going to put in for a conventional, you're going to put in for a bond program, whatever. And if necessary, what's the difference between a pre-qualification and a pre-approval? Does anybody know? Without looking at the slide, not looking at the slide. Darn it. All right, so that's always been a question. What's a pre-qualification versus a pre-approval? I cannot approve a loan. I can't. An underwriter has to approve a loan. So if I have a file that I don't get an automated approval, but it meets maybe manual underwriting guidelines, you know, FICO scores over 580 for VA and FHA or over 620 for conventional, and maybe I know they have some compensating factors. Maybe it's an FHA, they're putting a bunch of money down. I've gotten actually automated approvals in a 580 something FICO score in FHA because they were putting 30% down on an FHA. Still had mortgage insurance, but I had automated approval.
Yeah.
And yet I've done other ones where I've done a manual approval. That has to go to an underwriter. Underwriter has to approve any manual underwrite. Maybe I've got income documentation, but I don't know if I can use all the income. Maybe there's some inconsistencies. Maybe someone went from getting bonuses to getting commissions or bonuses. What's the other one you can get? Bonuses. Yeah, maybe. Yeah, because some people get bonus income, and then sometimes they'll get commission income. Salespeople, and if they switch, there's different requirements for how long they have to have it and stuff like that. So sometimes, if we have questions about income, I've gone back to underwriting and said, I just email one of my underwriters, say, hey, can you take a look at this file? Tell me if I can use this income. Am I calculating it properly? Rare, but if I have questions, I absolutely don't hesitate to go there. I never want to tell a client, ooh, I guess the pre-qual isn't really good. Sorry. That's a bad thing, as we are. So, that's what that's for. All right. Now, this little form is just a little marketing piece, and I'm sorry it's kind of a little stuff because when it's brought into the system, but this is an example of what you might give a client for starting the process. You know, what do they need to know? 2 years residence history, right? If you currently rent, landlord's name, address, telephone number to verify most recent 12-month history, maybe needed, maybe not. Most times it's not. This really depends a lot on how much other credit do they have in the file. Is it a manual underwrite, stuff like that? We may need that. Employment history, 2 years. Dates of employment. This is a big one too. You'd be surprised. Somebody's like, I don't know, how long have I been here? Dude, how many jobs do you have in the last 2 years, right? They forget something that was 6 months ago. So it's nice. I mean, if I take an app over the phone, this is always a problem. You know, prior addresses, prior employment history. That's why I like the online app system, because they're there. They can actually go maybe look it up while they're, you know, do it when it's convenient. Oh, and remind me to go into, when should you like send the loan officer a pre-qual? And the answer is not Friday at 5 o'clock. I just want to bring that up.
The best time.
Or like when I'm getting ready to go on vacation in 5 minutes.
That's how you grow your business, is
I
to go
know,
on vacation.
I know.
That's when I remember everything, Friday at 5.
I updated one the other night, Sunday night after I got done in a pool and having wine with a friend of mine, and I think it was 10 o'clock when I updated it. And well, when I came back today, he's like, the loan amount's still the same. Oh, you updated the, oh, yeah, well, the payments are right, but I forgot to update.
It was the wine.
You got the
The
gist.
payments were right, I got the right payments, but I didn't update the, he goes, I gotta put more down. I go, well, no, not really, I just forgot to update that part. And don't do it after you help drink a bottle of wine. That was stupid, I should have said I'll do it tomorrow morning. Anyway, gross income from pay stubs, amount, you know, and year-to-date profit and loss sheet. This is for self-employed, obviously, and those things can be important.
Yeah.
Again, though, you know, it's funny. My processor on a file I just submitted for underwriting. It's a refinance. She asked me for the borrower's profit and loss statement. I went, they're self-employed. I went, well, why are you asking me that? It doesn't say that on DU. Remember what I said? We're underwrite to DU on the plus product. And she goes, oh, you're right. I didn't think about that. I go, yeah. So unless the underwriter asks for it, I'm not getting it. And that's a nice thing, right? Don't put things in a file if it's not in the request for documentation unless the underwriter asks. Because you might wish you hadn't put it in the file.
Yeah.
That's like when people send me inspection results. Oh, what? It's crazy.
Less
Or the
important.
Binzer.
That was
I've heard of
the
loan
same
officers
thing.
putting the Binzer in the file, and the underwriter goes, oh, yeah, I need documentation. This has been fixed and that's been fixed. I'm like, what the hell? I'll never send you a Binzer. Plausible deniability if I never see it. Remember that. Anyway, just the assets and additional information, property tax bill for refis. And actually, you know, these things actually can apply if somebody's trying to qualify with their existing mortgage too. So that refinance stuff actually also applies, all that applies if you're trying to qualify with your current mortgage. Although, if it's here, I get the tax bill and stuff like that. So that's kind of what we get for documentation. So I want to go to pre-qual form. So let's say I got someone pre-qualified, okay, I'm letting you know, we talk, you tell me the purchase price is going to be, I say, okay, it's going to be an FHA loan, we're going to put 3.5% down, blah, blah, blah. So I fill this thing out, right? Now this is interesting. Is the buyer's name supposed to be up here on these lines all the time? I've always wondered about this, okay? Because right here it says, buyer has not consulted with a lender. If buyer marks in box line 3, buyers complete lines 4 and 5 only, if they do.
Exactly.
Only. But it doesn't say they can't complete them
Yeah.
if you haven't checked that box. So I would always just put names right here. I go, that line's not big enough. Joseph, Alexander, Williamson,
The great.
and Josephine, you know what I mean? It's like, they ain't gonna fit. So I've been
Yeah.
putting names here, unless I have one buyer, then I may just put them there. Because that's a confusing kind of statement.
And then you just have to sign the
That's
bottom.
very true.
Well, they don't have to sign here, that's
It's
the
just
thing.
the bottom though, right?
Right.
Yeah.
But it helps to put the names when it's too crowded there. It's stupid, right? And I resisted putting them up there for the longest time, but when you read it, if they mark box on line 3, buyers complete only lines 4 and 5. It doesn't say you can't complete 4 and 5, or 4, or 5 even, if you don't check it, right?
Yeah.
So there's really no wrong way of doing it, so I just do what I feel like.
It's 50-50 when you're dealing with other agents, whether or not it comes back and they ask you to sign that portion or not. It's,
Oh, really?
It's really funny. Yeah.
Well,
And it's really confusing. It really is.
Could
Yeah.
you say if?
Because
read
it's
line
like it's
3?
very straightforward. Because if they haven't spoken to a lender, you just check the box,
Right.
sign it, and you're done.
yep.
That's very straightforward. But for everybody else, what do you do?
Okay. So you see where it's going to be kind of a little confusing, right?
Yeah.
You can't go wrong putting their names in there. And, you know, there's really no reason to sign them and sign down here. Because that's
Where are the two
really just
signatures,
for that,
exactly.
because you don't continue down.
Yeah.
So this signature preempts the whole thing. All right, so lenders indicating line below date, don't worry about it. Buyer is married or unmarried, that's simple. Buyer is or is not relying on sale, lease of property, or seller concessions, blah, 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 blah. You know, that's pretty straightforward stuff, right? Buyer is or is not relying on down payment. Type of loan, occupancy, property type, it goes on and on. The thing that I want you to understand though is down here, well, starting here. By the way, you know this one right here is only for FHA loans. We gotta give them that, hey, for your protection, get a property inspection, right? I gotta figure out why. Bear with me a second here. This slideshow on my screen, why is it doing this? I've got like something I can't, like when I put my mouse over, it doesn't show up there, but it was earlier. I don't know what's going on. Sorry about that. Hold on. It's not that. That's weird. Because whatever I'm doing here is not showing there. Sorry about that, guys. A little while ago it was on my screen normal. See, this is what's on my screen, in case you're wondering what I'm looking at. Don't know why he's doing that. It's weird. I've never seen that before. I don't know what happened.
That's
The
okay,
monitor
Keith.
should be,
All right. I wish I had a laser pointer. All right. So,
Yeah, he's got one.
I was
oh my.
Top button.
You're the man.
The screen might be too bright though. It works on white, but not backlit.
Yeah.
Thank you, Lynn, for that. I appreciate you trying. So, I gotta go back another slide. I wanted to talk about something there in person. Eric.
Oh, there
Here,
it goes.
no, right here.
Spot.
All right. So, lender's complete. Now, here's the thing that's really important about this. Lender has completed a verbal discussion with the buyer, including a discussion of income, assets, and debts. Discussion. Lender's obtained a tri-merge credit report. Based on the information provided, the buyer can pre-qualify for a loan amount of X amount, assuming monthly principal and interest, provided total payment doesn't exceed, including HOA. Yeah, this is tough because we're estimating it, right? You don't necessarily know what it is on the property yet. And I don't like this because it says does not exceed. Well, the thing is, I don't know any of us who do this the way I think it should have really been done. See, here's the problem, because you all want to play this little game. The little game is, oh, this is all they can qualify for. So I'm offering $300,000. My pre-qual says, max of $270,000 loan amount with 5% down, right, or 10% down. They can't qualify for any more than that, because that's what that says. But that's not how we use it. We don't. What does it say?
It's to protect the buyer.
That does not exceed.
Oh, okay.
That's baloney. It's rare I have a number there that they can't exceed. Now, every once in a while you get somebody, you're like right on the ragged edge, you go, I hope your homeowner's insurance is only $75 a month, because if it's 80, you're screwed. I usually had those.
But what if you make like $400,000 and you're buying a $200,000 house? Then
But you
you never run into a limit issue.
Well,
Well,
see,
that's
but
gonna be
here-
terrible haggle.
But see here, here's the thing, is it really, does it really make a difference? Because everybody knows that game's played. So everybody knows that number may not mean diddly squat. And if you're, and I'm not a realtor, so you can totally ignore everything I'm saying here. But for me, I wouldn't want to be a realtor. I'll never have the patience you guys have. But for me, I'd rather go to a negotiation going, look, my buyer's highly qualified. So, do you want to deal with us or not? I can tell you right now, he's going to close on this loan. But we're not paying more than $300,000. Yeah, he can qualify for 6. How does that hurt you? I have a total different philosophy about that, guys. Very few of my agents actually want it higher than what they're offering. They want it right where it's at. I don't agree with that. That's just my personal
What was really silly is about pertaining to that specific section, it's only talking about the loan amount and it really doesn't pertain to the actual purchase price potentially at that.
Well,
And so
well, yeah,
a lot of people like don't even look at that properly anyway. Like they
But see, you bring up an interesting point and a valid point, one that I've never understood. So the next page I'll show you what I do. But there's nothing on here that says anything about purchase price.
Yeah.
Because that number has a lot to do with the purchase price versus what can they put down,
Right.
right? Well, why isn't there a purchase price on here then relative to that?
Or a down payment price. or how
Exactly.
much they're putting
Right,
down.
so I'll show you what I do. So, first of all, whenever I save a pre-qual, I'll say pre-qualification, the borrower's name, and I'll put 285,000. 285,000. You know what that 285,000 is? Purchase price you're offering. And I also put it on the next page, I'll show you, I put in a note based on a purchase price of blank. Because I can stand behind that because I validated the down payment amount between that number and what this loan amount is. That's what I do.
Okay.
Does that make sense?
Yeah.
So my point of this thing is, and it says interest rate not to exceed, I put market rate. Almost all the time. Very rarely do I ever put an interest rate. I only put an interest rate there if truly they're on that ragged edge again. Otherwise, if you put a rate there, that means if I put down 4%, which is what my rates are running, or 3.875, does that mean if it goes above that, they can't qualify anymore? That's what that says. Not to exceed. I can put 10% down for somebody that can actually qualify, and the borrower's gonna go, what? My rate's 10%? That's what we deal with, right? So you don't put down the rate that you're kind of looking at, the borrower's going, what do you mean 5%? I thought you said the rate was 4 when I talked to you the other day. Well, no, I mean, yeah, but you could qualify a lot more than that, so I put, no one wants to explain that. So what do we put? I put market rate.
And this has nothing to do with your good faith estimates, like in the regulations.
Loan
for
estimates.
loan estimates that actually pertain to those anymore, right? Sorry, I'm old.
That's okay.
Because those are the actual protecting the buyer that keep you within certain realms. This has nothing to do with that, right?
What do you mean?
Well, like let's say you send out something to a buyer and you give them like the closing cost estimate and stuff like that, it has to fall within a certain percentage, correct, of what it actually is. Like you guys.
No, you're talking about the fees.
Okay.
Some of the fees.
Yeah.
Some of the fees have no tolerance. Zero.
Okay.
My fees, my processing, my underwriting fee, appraisal fee, if I misquote them, I eat it.
Yeah.
If I have to charge higher, I eat it.
Yeah.
Title fees, if they use the title, see here's the thing, right, and not to get too off track on this, but it's actually kind of applies a little bit. So, for example, we have a title company that's on this thing, right, on the contract that comes in. This is the title company that you guys have agreed to use. But our loans, our loan estimates and TRID and all that, it doesn't really think about that it's designated on the contract. So we as a lender have to provide a title agent that they can use. Now we can provide our own, we don't have to provide what's on that contract, we don't have to. And if we do that and they don't choose that particular title company, then the fees can be whatever they end up coming up with because they didn't choose ours. If they choose the one we put on the loan estimate, whether it's the one on the contract or the one we choose, whatever fees we disclose, it's a 10% tolerance for those fees in aggregate.
Okay.
In other words, if the total title fees are $1,500 and I quote $1,200, right? Now, there's not $300 in that $1,200 for 10%, there's only $120. I end up eating the $180. Okay? So that's where that tolerance stuff comes in.
Yeah. Okay.
Okay? There's certain things that don't matter. Prepaid interest has no impact, 'cause it depends what day we close. How much they pay for homeowners insurance, that's whatever they decide to get. So some things have no tolerance, there's unlimited tolerance if you want to call it that.
Yeah.
The title fees, 10% if they pick the one that's on here. Since I personally believe we should put the title agents on the contract, and I get fees from that title agent before I disclose.
Yeah.
Right? So I'm getting the fees from the title agent.
Yeah, but you guys, like, when it comes to this, this isn't any buyer protections or regulations, so
Nope.
you're not held, yeah, okay.
No, it's just a prequel.
Yeah.
So that's why I kind of wanted to cover this stuff a little bit. So my point of this is, I could do the prequel just based on this. A completed verbal discussion in an application, hold on a second. Where is it?
Number 18 is the
Oh,
virtual.
tri-merge, actually, verbal discussion and tri-merge report. We can't get a tri-merge report without an application. So I was looking for the words application up there. So this is really getting in the app. But that verbal discussion is really what, we could do the app ourselves, right? Whatever they tell us. Well, my point of that is, that's really not that good, right? Because you really want some of this stuff. So I could do a pre-qual, and that's why I went back earlier and said, on a self-employed person, I could give you a pre-qual based on that just discussion. What's your income? Oh, I make $150,000 a year. Wait a minute, are you doing yard work? You make $150,000 a year? You know what I'm saying. So the point is, I always tell my clients this. When I'm doing the pre-qual process, I let them know that I can do a pre-qual just based on this discussion we just had and pull them credit. I said, but the fact of the matter is, if I send this pre-qual and without any of this stuff checked off, a seller's going to look at that and go, I have no idea if this guy can really qualify. If there's any other offer on the table, you're just going to probably be ignored. So, to give yourself the best opportunity to get your offer accepted, I want to get as many of these things that I can that I need for the file. If I don't need tax returns, I mark an A. I don't need them. But if I need pay stubs or W-2, and typically, for someone who's not self-employed, it's just 30 days of pay stubs and one W-2 last year. I'll mark them, yes I have them, or no I don't. And then over here, of course, down payment and reserves, documentations, assets, gift documentation, if someone's doing a gift. I don't want to check a pre-qual is done unless I got a statement from their mother or father or aunt, uncle, sister, whoever, showing they have those funds available, right? And so, if I don't, I'm going to say I haven't verified it. So I try to take the borrower that it's in their best interest, because I don't want you wasting your time either, that they give you as many things as possible to give themselves the best chance of success in getting their offer accepted. Make sense?
Yes.
That's why, again, and by the way, guys, how many of you have ever called up a loan officer and questioned them about the pre-qual because you want to get that warm fuzzy that they really did do the pre-qual, they didn't just mark those off. Because I know it happens,
I've had a couple that
yes.
it's
On the listing
like,
side.
don't just tell me, you know, the closing is 285, I mean, have you done?
Go ahead.
And then, and then what happened with that is we got within, I think, just 2 days of closing, and he had failed to verify,
Yeah,
and it's like,
and you checked it out.
yeah.
You know, unfortunately, there are bad actors out there, and you never be able to prevent it all. But I had a client of mine, I did a loan for them for their house they were moving up in Prescott. And they got an offer on their house, and right before they were to close, it fell out, it was a VA loan. And the loan officer, and I caught the loan officer in a lie. I looked at the LSU, I looked at the card, you know, at the pre-qual, everything. The guy marked off that he was qualified, but then he denied him for his credit score.
And it's
He
like,
actually was
excuse me?
hoping he was gonna be able to do a credit repair in time to close on his loan. He was not pre-qualified.
Countrywide.
And my sellers, my clients spent over $2,000 on stuff on the house after the inspection to get it fixed so they could get it closed. I told him I'd go after that mortgage company. So I did.
Yeah.
I was pissed, and I was pissed because, pardon my English, because it reflects back on all of us. When it's a bad realtor, it reflects back on other realtors. You don't want to hear somebody go, well, you know, I think realtors are, you know, they're terrible, they lie to you, they do this and that. No, buyers are liars, I saw it. So, you know, I resent when I have people, bad actors in my business. I really do, you know. So I stand behind my pre-quals. Have I ever made a mistake? Of course. Very, very rare in the 17 years I've been in business. I've missed things. And last time I was here, the conversation we had, I think I talked a little bit about that. When things change in guidelines or something, you don't, it happened a long time ago, you don't catch it. It can happen, we're not perfect. But the best thing you do, of course, is we own up to it and we do the best we can to fix it.
That's right.
So, you notice my form's all filled out, ready to go. I just have it ready, boom, I can do it real quick. Any questions so far? Oh, yes, we're gonna hold those questions. All right. Purchase contract, oh, it's blank, what the heck, no, I'm joking. So, and actually, I'm gonna open up the purchase contract. I wanna talk about
They've
this.
gotten much simpler.
Yeah, I know.
What's that?
And
The
they've got
forms
much-
have gotten much simpler.
The forms?
Yeah.
Oh, that, yeah. Just write whatever. I, so-and-so, agreed to purchase this property
Must have
for.
7 points.
Too funny. Oh, that's interesting. I need to, how do I get that off of there? Now that's funny, because I
You have it on your screen?
it's not on my screen. I gotta shut this down here, this part. Here we go. All right. So we're gonna talk about this thing a little bit. Let's see. All right, let me sit down and talk about this. All right. So you can see all this highlighting I did.
Yeah,
Yeah, I know.
cool, cool.
Finance section.
All right, let's blow this up a little bit here. I'll try not to bore you too much. What time is it?
This is
Crap,
cool, you're
7:15
doing
already.
great.
Well, I'll wait till we're done, then you can say what you think is good. But seriously, I do want critical feedback on anything you think I covered too much, not enough, whatever, cut out the jokes, whatever it is. I haven't done this one before, so. All right, so first important thing is close of escrow. So, you ever think you might want to talk to the loan officer about what's a reasonable close of escrow? You know, before you just throw data out there? What's everybody put typically? 30
Usually
days
30 to
for the time you write the
45 days.
contract, and if you negotiate for 4 days, now you're down to 26.
But does that, oh, wait a minute, but I was gonna say, would that not be contingent on that pre-qual?
What do you mean?
Because I have come to you guys to say, based on the pre-qual, it looks like, what do you think?
Well, no, we already got them pre-qualified, so now you're out writing a contract, right?
Yeah.
So my thing here is, I think it's reasonable to talk to your loan officer and say, hey, look, we're gonna be putting in an offer and a contract, you know,
Okay.
what kind of close of escrow, how many days you like? We're looking at 30 days, is that okay? Can you do it? I mean, because there's times in this business when we get really busy,
That's
like
true.
things have picked up a little bit now because of refis, because the rates have dropped so much, right? So maybe turn times might have gone up a little bit. Even though most companies prioritize purchases over refinances for underwriting. I just think it's a good idea. I've had, you know, all of a sudden I get a contract, I got 21 days or less. I'm like, you know,
How come you keep looking at me every time you're talking about these crazy times?
Would have been nice of you, yeah, you know.
I'm just in the habit of 45 days.
You do 45, that's a long time.
Yeah.
I don't know, that's, you know, here's the,
So that'll actually
here's a
potentially
funny
against
part
it
about this though,
for
guys.
sellers.
I don't like too long to close the escrows, you know why? Because we get it done so fast and it sits there, and you gotta worry about making sure you don't forget anything towards the end, because you can't, you know, you don't wanna put out the CD until at least 10 to 15 days before close of escrow, right? And, you know, we're typically done pretty quick. So I don't like those real long closing ones, because I gotta keep it on my radar, okay, in 2 weeks, 3 weeks, I gotta, you know, make sure the CD goes out and all that, so you can't make me happy.
So can we say on or before, and that would, you know, because if we have.
Well, of
the
course you can do it, you can do that in here, you can do honor before, but, it's interesting, you know, honor before, I've had title agents go, well, we want an addendum to the contract to officially move the date. Well, it says honor before, why can't you just get a verbal agreement for everybody? Most title agents don't wanna do it that way. They want
They want
something
the
in
exact
writing that
date.
Or they'll
everybody's
just
agreed.
automatically assume the on date.
I'm okay even with an email to all the parties saying, you know, both agents and the loan officer and title going, okay, we agree, we're gonna close on this date. I personally think that's okay.
But legally, it's like, it.
It's kind of a gray area, so
Yeah.
I think most title companies rather have that, once you agree, just doing a quick addendum. So that's why honor before I don't think really matters too much.
I think honor before really helps the seller and the buyer more than it does anybody else.
Yeah, there's that flexibility, but you know, the truth of the matter is, how often do people really want to change the close of escrow date? I mean, once they set it, most times I think that's what everybody's shooting towards, whether it's moving out or moving in. Sometimes I just had one where they did want to move it up, but I kind of resist if they want to move it a day or two, unless it's from Monday to a Friday, and I'm like, well, you never should have put Monday as a close of escrow date anyway. But, you know, because there's actually more work than you think that goes into that. We gotta go get insurance updated, for example, and sometimes that's easy and sometimes it's not, homeowner's insurance. Because it starts on close of escrow. If you're gonna move the escrow up 2 or 3 days, even a day, it's gotta start on that day now. So there's things that occur that may seem simple, but can impact more than one person.
I'll
Right.
start it then, okay, that way I can remember.
I just, you know, I always like to have a conversation, because it depends too on the type of, what if it's a grant program? What if,
Yeah.
what if it's a condo and we have to get condo questionnaires done and all this stuff, right? Maybe a condo we might want a little bit more time, just give me examples. Okay, this other one here, Denda Incorporated. When I get a contract, I review the whole contract. And these are things that not everything, a couple things I highlighted here I don't really care about, but I wanted to go over them just as a contract basis. But these are things I go right to here. I go, okay, what kind of addendum are incorporated here? If I just have a contract, I got HOA checked, I got lead base checked, I've got buyer contingency or whatever. I'm like, guys, where are they? Right? So send the loan officer everything that's checked here under addenda incorporated. Okay? Additional existing property, personal property. I'm only covering this because I had something just happen. It doesn't happen a lot. But remember this comment down here under additional existing, additional existing personal property is bolded section. Included shall not be considered part of the premises and shall be transferred with no monetary value and free and clear of all liens and encumbrances. So personal property can't be transferred with value. When it's transferred with value, we have to deduct it from the purchase price. So I had a file here recently where, and I saw this in the appraisal and I said, okay, I'm not going to say much about it. But in the pictures in the appraisal, there was this paver patio off the side of the house. And you ever see those shade structures like you might take to the ballpark?
Yeah.
Or, well, you know, your
Yeah.
kids are playing ball.
Possible.
But it was a much more sophisticated one, but its legs were in concrete pots, pots with concrete in them, but it was sitting on the pavers. It wasn't attached to the house. Sure enough, the underwriter come back and said, I need an addendum to the contract and something from the appraiser saying that there's no value in this personal property being transferred with the property. Yep. This was just like 2 weeks ago.
Wow.
Yeah, it was closing on the 31st. We had to get it done right before we closed. So just kind of be aware of that. And there was nothing mentioned about this canopy thing. And it wasn't in this part of the contract saying there's no value to it. And the appraiser didn't address it either then. So we had to have it, both of them addressed. The appraiser put in just a note saying it's transferred, it has no value. And also an addendum to the contract said there's no value. So that's why I just wanted to bring it up because it just happened. Now the pre-qualification forms attached, loan contingency, unfulfilled loan contingency, interest rate, necessary funds, loan status update. So reason I wanted to go over this, I want to go over this in detail, but read this and be familiar with this, because the buyer needs to be familiar with this, okay? Now, part of this where it talks about, within 3 days, you have to apply for a loan if you haven't already. Well, we're basically, that's stupid because we're doing a pre-qual typically, although you can do one without, you could say, right? So it doesn't really come into play much. Unfulfilled loan contingency, this one they're talking about where you can get earnest money back, but you have to notify. But the one I'm more concerned about is this one, interest rate necessary funds. Buyer agrees that the inability to attain loan approval due to failure to lock the interest rate in points by separate written agreement with the lender, which would be like the loan estimate, or the failure to have the down payment or other funds due from the buyer necessary to obtain loan approval without conditions and close this transaction is not an unfulfilled loan contingency, which means they can lose their earnest money. In other words, if we deny the loan, because now they don't have funds, even maybe they did before, now they don't. James went gambling, lost $2,000, and we need verification of funds because whatever. Point is, they could lose earnest money. And I've actually had people ask me to deny a loan so somebody can get their earnest money back, and I'm not going to commit fraud. I will never do that. That's one thing that I hope anybody who ever works with me understands is I won't do anything ever to jeopardize my livelihood. And it's just wrong.
But so for example, let's say they go out and buy a crap ton of furniture and it throws off their debt-to-income ratios. Would that still, because that would be like a little, it doesn't have to do with their down payment, you know what I mean? So would that be like one of those weird kind of stupid loopholes where they did something stupid? Because that totally makes sense. Like if they have the money and they spend it, yeah.
Oh, if they do
My
that,
client bought school clothes for the kids, and it totally changed what she needed to have in the bank.
See, that's very straightforward, makes it,
Right.
But like, because I've had several times that, well, not several times, but I did have one time in particular, they went out, bought like $10,000 in furniture, financed it, and oops.
right, let's cover this. Look
Yeah.
at this unfulfilled loan contingency. You look to read what it says. This contract shall be canceled and the buyer shall be entitled to a return of earnest money if, after diligent and good faith effort, the buyer is unable to obtain loan approval without prior doc conditions, delivers notice, blah, blah, blah. Well, you could argue after diligent and good faith effort, if they were out spending money before this thing is done, they were not diligent. We tell our clients all the time. My first email, I use a CRM that has a campaign during the loan process, 6 emails will go out. My first email, it lets them know disclosures are coming, all that. I have a long email that tells them do's and don'ts during the loan process. Reminding them again, don't do these things, and that's one of them. So they can't say they didn't know. So that is where you kind of have some room there. Now, if the loan officer, if somebody goes, if that borrower goes to the loan officer and go, well, tell them I couldn't qualify because no, you weren't pre-qualified. I don't like being in that position. I'm not going to take the fall for somebody who didn't do what they're supposed to do. That's just me. Good or bad.
Cool.
All right, loan application, just, again, there's a whole bunch of stuff in here, guys, that you should be familiar with. This is all part of the loans process, okay? I'm not going to go over all this stuff, but just be aware. Now, I do tell my clients, there's a couple different times when I get money back. One of them is the appraisal contingency, right? Number 2I or 2L. If it doesn't appraise, or at least the purchase price, they could cancel the contract and receive return of earnest money. Now, in FHA and VA, they can never lose their earnest money, unless there's, they can't qualify for the loan. But that's a totally separate issue. A mandatory clause, that's that's all designed to protect lower income on it. People typically get an FHA loan, or typically less educated about the process and everything's going on, and they protect them from predatory actions and stuff. Same thing with VA. Okay. Anyway, so just again, in essence of time, if you've got questions about any of these things later, we can go over it. And if you want a copy of this thing that I highlighted, I can certainly send you that. But it's just things that I think are important. Escrow and title company. Why would I highlight that? Well, because I get things all the time where you get such escrow company and a phone number. Who is it?
Yeah, exactly.
Sometimes I don't even get that. Take my pet peeve with real estate agents and these contracts I'm gonna be honest with you guys. A lot of them do crappy, shitty, lazy jobs. I'm sorry, I'm being honest with you. If I did my job the way I get a lot of contracts, you guys would be pissed off and never use me and send my clients to me. I'm telling you. I'm just being honest here. Do your job. Fill this stuff out so I don't have to go find it out. Give me an email. It's your escrow officer. You should have this. You should have a pre-form fill on your contracts. It's got this stuff all filled out.
I do.
We
I
have
love
a-
people like you.
We have a
In a
cover
platonic
sheet,
way.
Keith, we have a cover sheet that includes everybody, you know, from
Right.
both the buyer and the seller.
Well, that's awesome.
both
I love those.
agents.
You
And-
rarely get
yes.
those from people. Those are awesome. But anyway, those are great.
Yeah.
I just don't like people making work for me. I have enough to do when I get these contracts. I want to be immediately emailing title to get fees. I don't want to have to go figure out who it is. And I'm serious, because sometimes you get a hold of title company phone number and you don't even get an answer back for a while. So anyway, and here's the other thing, guys. I'll get this contract a lot of times, escrow hasn't even been opened yet, but I don't want to wait for fees. So a lot of times I'll send a request off to the title agent with the contract attached, going, this is going to be open soon, can you give me the fees? And they'll do it because they got the contract there, right? So do your loan officer a favor and just complete this thing, that's all. You make me happy. I can be blunt spoken, guys, sorry. Just, look, you know, you can beat me up all the time. If I don't do my job right, beat me up, go for it.
A happy
I deserve
lender is
it.
a happy-
What's
So
that?
happy's
A
good
happy
too.
lender is a happy buyer.
Well, you know, it's about being professional, right? And too many people in our business, they're not really professionals. They don't act professional. So, remember, think about it this way. If you had to pass this through your boss first, you know, it's kind of like, you know, would you tell your grandmother that? If you had to pass it, that you did that. If you had to pass it through your boss first, would they be happy with what they're seeing? Maybe think about it that way. And unfortunately, a lot of us don't have bosses, other than the broker, in your case. Why did I highlight wood destroying organisms, insect inspection? Anybody know why I highlighted that? Do I want the termite inspection? You guys do want it every single
Yeah.
transaction. Do I want the termite
No.
inspection?
I don't think so.
No, you said last time no.
Except,
Oh, VA.
bingo!
Yeah.
Okay, so this is why I bring this up. And the other time is if the appraiser notes potential termite activity.
Yeah.
So, the reason I bring this up again is because I typically am not going to ask for a termite inspection. If it's VA, we need a termite inspection. We have to get it. Give it to your loan officer ASAP. Once the inspection is done, you typically have your termite inspection done.
Yeah.
Get it signed by the borrower, please. No one ever does. There's a signature line there. If not, we'll get it signed later. That's just one of those things. And get it to the loan officer, because the loan officer, if they're doing their job or their processor, should look at what did they mark off as far as, do you have faulty grade, do you have excess water, do you have earth to wood contact? Those have to be resolved before we close a loan. So on a VA loan, get that thing over there right away. If it's not, then don't do anything unless the loan officer asks for it, because you got
Cause more harm.
appraisal issues where these things are termites. Okay?
Those would need to be resolved before any loan, correct?
If we get the termite inspection and they have those issues, yes.
Right.
That's correct. And quite frankly, you know, you could say these should be resolved for the buyer, but,
Right.
you know, if a tree's touching the house, it's gotta be cut back based on a termite inspection. Okay? Let's see if I got anything else on this one I highlighted. Oh, yeah, just kinda goes back, additional terms and conditions. And I touched on this, I believe, when I was here last time. This is used for a lot of different things. The one time when it's helpful for a loan officer is when you have a buyer, and it's a couple, let's say, but one of them's not gonna be on the loan. We talked about this before, right? So, but they wanna be on title. If they don't wanna be on title, that's fine, doesn't matter. But if they wanna be on title and they're not on the loan, then if they're gonna be on title, you need to put both buyers down on the contract. But here, you put a comment that satisfies everybody, including the lender. You put a comment here, and I've never seen this not work, and it was actually, I told you, I can't take credit, an escrow officer recommended this. You put in here a comment, you say, you know, Joe Smith is a non-borrowing buyer. So that tells us, he's not on the loan. It tells an underwriter he's not intended to be on the loan, but it tells title, he is on title because he's part of the purchase contract. Okay? Non-borrowing buyer. Ever since I've had my agents do that way, I've never had an issue with that. So kudos to that escrow officer. And then down here, I highlighted this whole last page. Why did I do that? Now, agents are, yes, exactly, again. Now, agents are getting better about making sure these licenses are here, right? These have to go on the loan and all that stuff. So they're getting better about doing that. What they're not good about is when you come down here to buyer's name, signature, they never put addresses. They don't put addresses of the seller either. They may not be living in the house. Why is that important? Who's it important to? More so the title than to us, by the way. More so the title. No one ever fills that stuff out, ever. No, nobody. Title needs addresses for the buyer because they send them a packet. Do your title agent a favor and fill this crap out. I'm serious, it's not that difficult.
Yeah, well, that's the
No
funniest
one-
part.
no
is
one
not
does.
Title. They don't even put their information in,
No
and they
one
expect them
does.
to put title too. You know.
No one does. But
Yeah.
again, it'd be nice to complete the document. Title needs these addresses, not us, we don't care. I don't care. I already had the buyer's address, I did pre-qual, right? And the seller I don't care about. So it's for title guys, so I'm trying to help out. Like I said, we're all a team.
Awesome.
Alright, so enough on that, enough said. I'm sorry I chastised you like a grumpy old father or something. Let's see. You're not gonna invite me back if I keep this up. By the way, guys, I don't know if you haven't noticed this, but one, I really do actually enjoy what I do, for the most part. It has its moments of frustration, but I also truly believe that we are a team and we all benefit. If nothing else, we feel good about how well we did for our clients.
That's it, yeah, and that's the truth, yeah.
Why is this doing this?
Well, you told it to go back to the
Well, it's
beginning.
going to that, but on my screen, it's not doing the,
Is it pulling up like the next slide that's supposed to be coming
well,
up?
it's coming up with that black stuff though, and before, I mean, I had it fill my whole screen, like it was doing up there.
Oh yeah, yours looks different.
Yeah, I don't know what, but it wasn't doing that before, I have no idea what I did here.
It's like presentation mode or something like that.
I don't know what I did, it's just the weirdest thing.
Never felt
Use
whenever
presenter.
we were doing it at
Oh, wait a
church, it
second.
always
Try this.
started acting wonky.
Oh, some reason a click was use presenter's view. That's weird. Oh, there we are, there's the mouse. All right. I can sit my lazy butt down and do this. All right. Oh, I gotta get back. Get down where we
Where
were.
were we?
Sorry. Ooh,
Go back.
back up. All right. After the contract accepted, what happens next? This is more for the borrower, but a little bit of timeline, all right? So, the borrower, so what happens, I'll just kind of talk this through. So, we get a contract, I'm doing some things that the borrower doesn't see. I'm ordering title fees. And I'm finishing up the contract so I can request disclosures, okay? So that's the first thing that's gonna happen. We have to disclose within 3 days of getting the contract. So if I get a contract today on a Tuesday, I have to disclose by Friday. If I get it Thursday, Friday counts, Saturday doesn't count. Friday counts, and then Monday, Tuesday I have to disclose by, okay? And there's flags in our system that tells us. Once we have there's a certain amount of items you have to get, 6 items that flag an app date, and one of them is a property address. So typically on a pre-qual, it's the last thing we're waiting on. We have assets, we got credit, we got income, what am I missing? Income, assets, credit, social security number.
And two not to exceeds.
Yeah, no, not that. But once we put that last item in, it flags it, right? Boom, now we got 3 days. So we're on a time frame, we have to get stuff done, right? So once, and by the way, that new system, I've only done this twice now. The loan application system I was telling you about isn't where we process loans from. It's just kind of an interface, getting a loan app and doing a bunch of other stuff. We can now lock from that system, lock our interest rates, we can get all the fees in there and everything. And the neat thing is, we can now disclose from there. So typically what happens, and I've only done 2 of these so far because it's relatively new. Typically what happens is, we have a loan system we call Byte, we've been using for a long time. But there's no way to do an app in there. We had to enter it ourselves. And our online app sucked, quite frankly. And so now we come up with this interface for doing the app. So Byte is where we do all the processing in, okay? But when I was in Byte, if I'm in Byte, I cannot do disclosure myself. I have to request them. And a lot of times they go out 11 o'clock at night because there's actually a group in the Philippines that doesn't. It's contracted out, right? So sometimes they'll come up with a question for you, you get an email 11 o'clock at night, okay, when the next morning you answer it, and of course, disclosures haven't gone out. This system now, we can actually send as loan officers our own disclosures. Now the danger is to get all the fees in there right. If we screw them up, we're backing us up. But I can actually get a contract on a weekend, and granted, I can't necessarily get title fees, but I do have the ability in the system to plug in a title company that I'm using and pull fees in. They call it closing court. And I can actually pull in fees, which should be what the fees are. I could actually disclose on a weekend when I get a contract, if I wanted to. It's pretty slick. So it's kind of neat. So it allows us to maximize our use of our time.
Can I ask one question really fast? Sorry.
Oh, that's okay.
When you say disclosures, like you're ignorantly, what are
I'm sorry.
disclosures?
Good question. All right, so initial disclosures. What's the most important thing that goes out is probably the loan estimate. Okay, so the initial disclosures, we have the loan estimate that goes out. Now, this is where, of course, we're estimating interest rates if it hasn't been locked. Very rare do I have clients wait to lock, most lock. But, so it goes out with the loan estimate. You guys all seen the loan estimate, right? It goes out with the parameters, purchase price, loan amount. Here's all the fees, estimated payment, because estimated payment, I'm estimating homeowners insurance as an example. But I've got actual taxes. I should have actual HOA dues from the HOA addendum, it is correct. So the only thing I'm estimating at that point in time is homeowners insurance. I'm usually pretty close. So the loan estimate goes out with all those numbers. It could be HOA dues now, or prepaids, like what do you call it? What's one of the fees you guys pay for HOA?
Like disclosure,
Transfer.
transfer fee?
Transfer fee, thank you.
Yeah.
Right, so, or maybe capital improvement fees. If it's on the HOA, that's all gonna be in there. Randy Courtney's team has that $350 fee, right? If I know it's Courtney, I'll throw that in there.
Okay.
And sometimes I'll have that form, sometimes I won't, but I'll typically put it in because I know it's coming, unless it's a VA. Can't do that. And along with that, so the loan application they filled out, that goes out. Now that's all been completed by me, because there's some information we don't get on the initial loan app. We don't want to bog it down. So for example, we don't get how many years of education they have. I don't get whether they're a veteran or not. So it's a few things we fill out after the fact, not to bog them down during the process. So the loan application goes out. They have to review it for accuracy. Credit score disclosure. Information about your appraisal, that you're entitled to get at least 3 days before close of escrow, and things like that. So it's all these disclosures that they're informed about this process of the loan and what things that are going to be happening. Borrower authorization, for example, consent to proceed. Once they get that, they sign that consent to proceed, I can order an appraisal, for example. I cannot charge a borrower anything other than a credit report fee, which we don't do. That's the only fee I can charge them before I get a consent to proceed. Cannot charge them for anything else. Okay, so there's all that kind of stuff that's going on in those disclosures. They do go out electronically, and all but one form can be signed electronically. The Social Security verification form, they require an actual hand signature. We don't need the original document, but we need their signature on it. They can just scan and send it back to us.
Okay.
They only have to print one form, each of them. There's one form for each.
Okay.
Other than that, everything else is signed electronically. It's pretty slick.
Cool.
Okay, and in the case of an FHA loan, you'd send, for your protection, get a home inspection as a disclosure?
I believe that's probably in those. I'm pretty sure it is, but I actually, as per the pre-qual, I'm supposed to send it out as part of the pre-qual. On the form, there's that check mark. If it's FHA, they just.
I thought, weren't we agents on the hook for that too?
What?
Weren't we on the hook for that too?
I don't know, but I see that sometimes from agents where they talk, but it's very sporadic, where they say get a home inspection.
Yeah.
It's pretty sporadic. I mean,
I know,
pretty much everybody gets. I mean, how often do you ever do a loan anymore where somebody doesn't get a home inspection unless it's maybe cash and they just they don't care.
Yeah.
But
At Prudential, that was mandatory for them, but that, when I went to Randy, I almost forgot about it.
But understand, FHA, you don't have to get an inspection. It says for your protection, get a home inspection.
Yeah.
It's just
butt.
recommending it.
It's a disclosure.
Exactly.
Well, we use
It's
it as a
recommended.
CYA in general, no matter what, as a buyer's agent. get an inspection, and it doesn't have that little box to check if they're not gonna get one or something like that too, or something, I forget. I don't know, but it was a CYA document that Prudential mandated you
Really?
used. Yeah. Yeah.
So this thing basically talks to the borrower what's gonna happen, right? So this is really more for the borrower ahead of time, right? We're gonna order the appraisal, we're gonna talk about locking rates, they gotta sign return disclosures, but you know, they're gonna do that before we do an appraisal. Typically, we're locking the rate before, most times.
I like number 6.
Talking about earnest money, so a lot of this is really more for the borrower. I just want to kind of give this to you because I thought it's a great thing if they're kind of curious about that process to give it to them. But from our standpoint, you know, as far as the timing goes, so you know, when you look at the contract, there's a certain amount of time that the borrower has to do things like, you know, the inspection period and all that stuff. But we don't want to wait any longer than we have to on our end, because we don't have to order the appraisal right away. I think on the contract you have to order within, was it 10 days, I think?
Well, don't they normally?
Yeah, I
And
think
that was
appraisal's 10
because of
days.
the bins or, you know, because we,
Yeah, but here's the thing. I talk to my borrowers, and I talk to my agents. Okay, I'll wait to do the inspection, but when's the inspection? Don't take a freaking week to do the inspection.
no.
When the inspection gets done,
Yeah.
if you don't have any deal killers, then let me know so I can order the appraisal.
Yeah.
If you got some deal killers, that if the seller doesn't do something about these things, you're gonna kill the deal, then let's hold out on the appraisal. But you need to notify the seller if we're gonna be going past our timeline for ordering the appraisal. I don't wanna take the hit. Does that make sense? And why do I do that? And why do we wanna do that? We wanna try to protect our buyer for paying for something unnecessarily, like an appraisal. It's $475 or $525 for FHA. So if I can have the time, now, I don't need to wait. So here's the timing for us. We're gonna order title fees. We're gonna disclose. We're gonna order title documentation. We need the prelim and a bunch of other stuff. We need a documentation that you got earnest money, things like that. On our end, we're gonna be doing some things with the borrower when we send out a letter that says, hey, explain these addresses in the last 2 years that don't make sense. We wanna make sure they don't have another property. That's on their credit report. These addresses that's where they're not living right now. We wanna make sure they don't have a property they forgot to tell us about. What about these credit inquiries in the last 120 days? Did you get any new credit? Explain these things. Example, one of mine, she said, oh, the credit inquiry was for my daughter's apartment up in Flag. Turns out she's actually paying for it. So we got a copy of the lease, so we can add it to her debt ratio, my clients. So things like that. Any derogatories that are recent, we're gonna want explanations for them. And then underwriter can always ask for other derogatory explanations if they want. So these are things I'm sending out or my processor to my borrower. Any follow-up documentation, maybe I did the pre-qual 2 months ago. Now I want the most recent 4 months of pay stubs and the most recent bank statement, right? So maybe some follow-up documentation. Once we get the title stuff in, we prefer to get the title stuff, we don't have to, then we're gonna send it to underwriting. Now we don't need to wait for the appraisal. I would love to have the appraisal, but since I'm waiting for inspections, I'd rather get the underwriting done, and just in case there's something that the underwriter comes up with that I could be dealing with now, not later. Comes out of underwriting, which we call our pre-approval. We have prior to doc conditions and prior to funding conditions. Prior to doc conditions mean you gotta get those back in underwriting for a clear to close approval, right? Meanwhile, we're gonna wait till the appraisal comes back. We typically, on a purchase, we can do this. We can order the closing disclosure without the appraisal back, but I hate to do that. Because the appraisal can impact a transaction. We have to go back and renegotiate. So it's incredibly rare, unless we're doing a rush deal, we'll order the closing disclosure before the appraisal back. Now what's the closing disclosure about? And what's the timing issue on that? Back when they first started doing TRID, some places they wouldn't let you order the closing disclosure until you had final loan approval. Well, the problem with that is, once the borrower gets the closing disclosure and they review it, sign it, which our company, they don't actually sign it electronically, they have to look at it all the way to the end of the file, and it kicks off that they reviewed it, which I think is silly, they should just sign it. But once they sign it, they cannot sign loan documents for how long? What's the time frame? Do you know? Remember?
No.
3 days.
Okay.
So, if they sign today, or review it today, this closing disclosure, they can sign on Friday. Okay? Saturday counts. So if they looked at it Thursday, Friday, Saturday, Monday they can sign. The loan estimate, the weekend doesn't count. but Saturday counts on the closing disclosure, okay? Yeah, so it's important a lot of times to get this closing disclosure out as soon as you can, because once underwriting's done, we can turn right around and get docs out. So once underwriting is clear to close, we move the file right to docs. They could go out easily within 24 hours, sometimes a lot less depending on how busy things are. But, so you could get that thing, the title, and then, maybe a day later you're signing, or my point is, if you're waiting to final loan approval, now you got 3 days where you can sign loan documents. So we try to get that closing disclosure out as soon as possible. So timing wise, from an agent standpoint, here's where the parts I would say you should be very cognizant of in the transaction and how it impacts the loan. You want to be aware that you haven't ordered the appraisal yet. And you want to keep the loan officer in the loop of what's going on with the inspection and results so you can get it ordered right away. Bless you, my dear. So if you're doing the inspection with the, and you're sitting there at the, what do you call that, the executive review or whatever that thing's called, when you just kind of, the inspector goes over the results really quick before he has a full report. Executive review, whatever you want to call that.
Summary,
Is that a summary? Okay.
yeah.
And you talk to the client, there's no deal killers. In other words, if they didn't do any of this stuff, you still buy the house. Oh yeah, okay. Let's let the loan officer get the appraisal order. Let them know, all right? Let that thing get going. Appraisal are taken anywhere from 5 to 7 days, all right? Most times within about 5 days. I had one here recently, one at 7. Again, is because refi business picked up. The other part that I want you to be aware of when it comes to a timing thing is, and this is more about the seller side, but if there are repairs that need to be made, okay, and let me back up here, how I want to say this. Let's say, for example, there are repairs that need to be made that were called out on the appraisal, okay? This is more important. That means the appraiser has to go back typically and re-inspect the house. So you want to keep on top of the seller and the seller's agent. You should set a time to try to get those done. I prefer a week before close of escrow. I don't want to be rushing, because if they're not done, I got to ask the underwriter to make them a prior to funding condition, and then we got to rush to get the appraiser out there and hope nothing gets held up. So get on their case. Agree to a time frame. Try to make it 7 days before close of escrow. Now, if it's your own stuff that you're not going to us, right? It's not something that was noted on the appraisal. You're not telling us you're making these repairs. Now, I may get an addendum to the contract that said the seller's going to give $1,000 credit to the buyer. Oh, well, just whatever. They just decided to, I guess. Well, we know what that's for because there's things being done in the house, right? We never wanted to say $1,000 credit in lieu of repairs. Right? Everybody knows that. I'm glad I brought that up because that's actually an important point. I didn't think about that. I've had addendums come over, in lieu of repairs. No. Because an underwriter will go, what are they? No, they got to be done. So, the other thing is, and I didn't think about this and I didn't put it down here. I'm glad we're talking about this now. It's imperative that you talk to the loan officer before you agree upon any concessions in lieu of repairs. Why?
Affects the value of the
Allowed.
No, concessions in lieu of repairs. In other words, you're going to come back to me with an addendum going, they're going to give a credit of X amount
Doesn't that
to the
affect
buyer.
the
The
loan
buyer may
amount?
never fix it.
Have they reached?
No, I don't know about the repairs. I don't know about the repairs. That's my point. You guys may have some things you want fixed, okay? All you're going to do is send me an addendum to have a seller credit for closing costs and prepaid.
Because doesn't that affect the loan amount? Or like
There's only so many credits that can be applied. And
Bingo.
Okay.
Bingo, bingo, bingo,
Well,
bingo.
say
I didn't know what
Ding, 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 ding,
That
ding.
can be applied.
All right, here's the thing. There's a maximum percentage of credits you can do on a loan. By the way, an investment's only 2% of purchase price. Most people don't realize that. FHA and conventional can be up to 6%, okay? VA, I think, is 4%. So, a couple reasons. One is, it cannot exceed closing costs and prepaids, okay? Remember when I was talking about VA a couple weeks ago? You can't use it to buy down points, that's a concession, or that's a inducement to purchase whatever, and you have to reduce the purchase price by that. So only can go towards normal closing costs and prepaids. right? You can't buy 2 years of home warranty, that's not normal, normal's 1 year, right? Things like that. And the other part is this. I had people give me oh, we're gonna do credits for closing costs and prepays. I'm like, you already got $5,000 in credit, and ain't got no more room. I don't even think about it. They agreed, then they come to me, I'm like, we can't absorb this. So that's the other part. Be aware that what you already are asking for, you may not have room for credits. So then you might want to ask for a reduction in purchase price maybe, or whatever. But my point of this is, if you're gonna do any change to the contract, talk to the loan officer. I don't care what the change is. There's 2 reasons for this. One is to make sure the loan officer's not gonna have a problem with what you're trying to do. And the second reason is, so the loan officer knows he should be getting an addendum to the contract. You know how many times I've come down to the end line and title goes, oh, we had a credit for this or this. What? I never got that. Or title didn't get it. I had it, but title didn't have it. So, communication. All parties communicate, okay? Sometimes you have to be discreet, I realize that, but then you can at least get on the same page and do the right thing and not have to try to correct a big mistake, okay? That's a huge thing right there. You know, I've made comments like, oh yeah, I'm just a loan officer, why would I want to know about that? Really, guys? No, it's kind of humorous, but no.
Alright.
You get my point.
Yes.
Right. This stuff here is just kind of the end thing, you know, it's just that process, you know, so I try to notify everybody, not just through my system where I have these updates go out. I send out the little videos and stuff, you know, when it goes in underwriting, when the appraisal ordered, when it's out of underwriting and stuff like that. But I also make a point of notifying all parties, well, buyer's agent and the selling agent and my buyer, when the significant things happen, like appraisals in, you know, underwriting, those kinds of things, and even in addition to the LSU. LSU is really more of a documentation thing once a week, right? But I don't wait for that to tell people important steps. And the same thing with my borrower. And the other part of this too is, it's important for a loan officer, or at least someone on the team, to work with the borrower and title at the end to coordinate that whole process, right? Notifying title, like when we got the closing disclosure out, we got final approval, you should be expecting docs soon, those kinds of things, so that they're getting prepared to call the client and set up a closing appointment, all that. So these are things that I discuss with the borrower as we go through that process.
The title company will keep your timeline in line.
Yes, they can help, absolutely. Because they got their own parts to do too. Well, and I think I might have made some comment about this in my last training, because I'm an arrogant guy, but I'm the most important person in this transaction.
That's right.
And I say that kind of sarcastically, but not really. And what I mean by that is this. The loan officer, if they're good and they know what they're doing, they should know everything that's going on, more than anybody else. Because we know what's going on with title, because you're not really in touch with title much once we start this process. You're really not. But we need things from title. We know what's going on with title. We know what's going on with you if you keep us in the loop, right? We know how it impacts our loan. We know things that impact you, timing-wise. So I feel like I'm the captain of the team, right or wrong, and it falls on my shoulders to make sure it all falls into place. And if you don't do something, if I didn't remind you or catch it, it's just as much my fault. That's how I look at it.
Yeah.
That's just the way I am, okay? And I don't mean that in an arrogant way, I really don't.
It makes
And again, I love when I have agents catch me on something I forgot or missed. I'm like, thank you. Because again, I don't want to look bad. So it's much better if I look bad to you than to the client or somebody else, right? Seriously.
On
Yeah,
this page, right
Yes,
here, at the end of line 13, it should say to our office to be reviewed. It's missing an ED.
Oh, to be reviewed. Yeah, okay, I'll try to.
Just
That's from our marketing system. I don't think that's what time is it?
So,
Oh my God, almost, ooh, shoot. All right, how much I got left? LSU, all right, it's LSU's in the last part. All right, so real quick on LSU, the first part of this form, the only thing that's different on here is you got close of escrow date and you got buyers and stuff and the premises address, right? All this other stuff down here is all the same. It's
Same.
Now, the only information that would be different here is that we put down the actual loan amount and all that stuff that might be slightly different than the other thing. I don't even know why this is even here. It's, to me, it's redundant, it's stupid, but it's what it is.
So do
And you
you
still-
have the buyer sign that?
You know, a lot of people want us to have the buyer. Now, what does it say? Buyer is instructed and the lender agrees to provide an LSR within 10 days of contract acceptance and upon request thereafter. Buyer commits to work with the above referenced lender on the terms described herein, but they already kind of did that on the prequel. But most people want the buyer to sign this, so I try to get it signed. I think the only person who really needs to sign to me, it's just a status update. Who cares what the...
But I think by having their signature
Yeah.
says that they are aware of the information that's there.
Yeah, but that's
you know?
silly.
No, I know,
They
I
know,
know.
you know how they're aware of that? I gave them all their loan disclosures.
I know.
Anyway, I don't agree with that. I don't know why it should be there. It's really a communication between the loan officer
And
and
us.
the agents,
To the seller.
particularly both agents, and the seller in
Yes,
particular, right?
yes, yes.
But to the agent too. You guys have all seen this stuff. I mean, most of these things in this top section, from lender received 1003 up, that all occurs when I get the contract and disclosures go out. Right? Those things all take care of right there. Right? Lender sent loan estimate, buyer indicated intent to proceed. We talked about that. 1003 comes back. Payment for the appraisal. When we order the appraisal, a link goes out to the borrower to pay via credit card. We can also send that link to somebody else. I had one here recently where the seller agreed to pay for the appraisal right up front. And so I got the seller's information, their email address, and in my system when I ordered the appraisal, I can say who to send the payment link to. It's really slick. And we can do that ourselves. So that's easy to do. So and it could be a borrower's parents who are paying for it. We can put their information in. And they get a link and they accept it, fill it out. Lender identified down payment source. I think that's kind of funny, right? Did I do that in the prequel? So a lot of times here I'm going, oh man, I did it like 3 weeks ago. And oh, I just better forget that. It's so stupid. Received and reviewed title commitment. It's interesting, yeah, I try to review all these as I can, but to me, that should be entitled letting us know if there's an issue. But I'll look at it real quick. I'll look section B, see if there's any kind of liens or any encumbrances that I think might be an issue.
Yeah.
Okay?
So you get a copy of the title report too then?
Yeah. If I don't have it when I'm doing this, I ask my processor to give it to me.
Yeah. So you guys won't loan if there's a cloud on title? No?
What's that?
You guys typically don't loan on things with clouds on
Oh,
title?
hell no. Anyway, some information about we locked the loan and all that, and that's actually is not a bad thing because it goes back again to the borrower, right? If not locked, and they all of a sudden screw up and rates went up by 0.5%, you know whether that's still a concern if it's not locked. Anyway, get the appraisal in, premises appraised for lease purchase price, right? That's all I care about. Closing disclosure provided to the buyer. Yeah, I really don't know how they come up with the order of these things because the next page is submit the package underwriter. Well, we're not sending a closing disclosure before it's underwritten. So it's not even in the right order. The loan officer did not put this form together. In fact, if the loan officer put a form together, it'd be like, we got the contract, it's submitted underwriting. We ordered the appraisal. All these other things, like, does anybody really read that? I mean, seriously, do you guys actually read what is checked off on this? Back up. If you read it, what things do you actually pay attention to? Oh, no one even reads it.
It's just as long as
Yeah,
they're
the
checked and it's on
Appraisal
track.
order?
Yeah.
Has it been submitted to underwriting yet? Right? Those are the two big things. The rest of that crap, you care it's locked, you don't really care. Do you care if I got the title commitment? You probably don't. I mean, I don't know, do you? I never had realtors go, oh, did you get the title commitment? They think in title's
Number
worried about
62.
that.
Did you hop on number 62?
I'm thinking it must have come up at some time in a committee study, we better write that down.
Yeah, that's why we have documents that are this thick on a loan process. I always tell clients, that's in there because somebody did fraud or said, oh, I didn't know I had to pay my mortgage on time.
Or at all.
Don't laugh, you should see what FHA says in their little forms about
paying
having to
on time.
pay the payment, and it could impact your credit if you don't. It's, yeah.
It's very threatening.
Scary.
Very,
Well, it's very informative.
very obvious.
Yeah. Anyway, so letter submitted to underwriting, got prior doc condition approvals, right? Appraisal conditions met. Why is that here when we have the other one about the appraisal come out for lease purchase price? That's because the underwriter has to review the appraisal and make sure everything's okay. That's why that's there. So once I get it out of underwriting, I check this off. I never check this just because I have the appraisal. Loan approval without prior doc conditions, which means we can order closing disclosure or closing docs, which are the next thing, assuming we've already ordered the CD, of course, before. Lender received signed closing loan documents. From here down, I think it's stupid.
I was gonna say,
That down is
because I've never
stupid.
done a loan status update that had the last one, 69. All
I've
funds
never
have
done
been
that.
received
I've
by
never
escrow
done that.
company. Never got one of those.
I've never done it.
That's the
Nobody
clo-
cares.
That's the
Who cares
closing
by
email
then?
you get.
It's
Yeah.
closed, who
Here-
cares?
Here's where I feel like I'm kind of done, which isn't quite true because I know I'm not personally done. When loan docs are typed, I'm not done because I'm still monitoring, make sure they're getting back to my funder, make sure we're funding okay.
Yeah.
So I'm doing all those things, but do I need to tell you guys that when that's all happening like in the last 24 hours? Well, I mean, the loan docs may have been done 3 days before or whatever, but I mean the funding occurs. And another thing I love about my company, if we have all our stuff to the funder early enough, they'll actually order the wire the night before.
Oh, wonderful.
I just closed one the other day, by 9 o'clock they had it recorded.
Nice.
Nice.
Yeah, now title jumped right on and got it done, but the funds were there in the morning. So as long as we can get docs out early enough, and they sign early enough, and they get the documents back, email package back to my funder, and everything's there, they'll order the wire the night before.
That's one of the big things you're
I
gonna
think
find
that's
is,
why close of escrow should
closing
be
date,
anywhere between Tuesday
if the
and
payment's
Thursday,
not
not
local,
Monday.
wire.
Well, that's also why you don't do Mondays, because we won't do it on a Friday.
otherwise it's not gonna fund that.
You hear that, guys?
Yeah,
And it's
that's-
the most frustrating email.
Don't ever do a Monday closing,
Yeah.
because we won't order the wire on a Friday night. We're not gonna let it sit that long. The other thing is this, I prefer you don't close on the first or second of the month.
That's right.
I got a closing right, well, no, that's not true. Yeah, well, I got a contract if they accept it, closing October 1st, 2 months, 60 days, on the 1st. Why did you do it on, like, you know,
What's
Or-
the matter with the 30th?
September? Yeah, October. Why not on the, September 30th, I don't know. Because the problem is, well, it's not really a problem. See, what happens is, one, I get paid based on, I'm just saying this because it kind of sucks. So, you guys get paid right away. If it closes between the 1st and the 15th, I get paid on the 30th. So, by closing one day later, I don't get paid for 2 more weeks, which sucks. Right?
Really?
Yeah, it's like a month. That's the way it works for us. So, but the more importantly is this. We end up actually doing documents for the prior month, and we give them 1 day of interest credit.
Yeah.
Because we can't sign and fund that same day, but it have, so it's a pain in the neck to do that.
Gotcha.
So I prefer either like the 3rd or later, if you do that.
Okay.
It's kind of one of those nuisance things. I mean, I don't,
That's
if it
interesting.
happens, and I'll deal with it, but I prefer not to do those first 2 days.
Just little things you don't think of.
I have 2 generic questions if we're
Yeah.
almost to that.
We're pretty much, I'm done. I'm done with what I had to say, I think. So I
Do
won't
you have
for
an
questions. I know
extra
it's
one of
late,
those,
it's 8
Keith?
o'clock, what?
Do
So,
you have an extra one?
Yeah, I got it.
as far from our agent side, it's frustrating because we don't have any control. We just want to get as many people to you as possible. That way we can try to get as many pre-quals as possible,
Yeah.
right? So on average, when you get an application, what percentage of people actually qualify for mortgages that you get?
That's a big
If I
question.
get an application, it's pretty high. What I find is that people who are questionable to begin with tend to not pursue getting pre-qualified, that's part of it. So if you try to get people to talk to a loan officer who want to buy a home, if they know they got bad credit and stuff, a lot of them don't even make the effort. They want to look and they want to kick the
You're the
tires.
biggest thing,
but-
like the hurdle. So
Right,
if they
but-
jump through your
but if
hurdles,
I'm-
they're good.
But once and here's the thing, right, as a loan officer, we cannot discourage someone from submitting an application. It's illegal for us to do that, right? We are supposed to encourage them to apply. So, I can a lot of times talk to clients and no, I can't qualify. And so I actually try not to ask too many questions because our system is pretty robust where just go in there and do the app, I pull credit, they got a 550, I can't help you, sorry. Now, here's some things you might want to go do because here's what your credit report looks like. Those are time consuming and they suck, but that's what I'm supposed to do. So, as far as how many people I qualified to actually submit an app, it's pretty high.
Okay.
I'd say probably, they actually submit an app, I'd say probably 80%. And again, it depends on the quality of the people that the agents are sending my way too.
Yeah.
So it depends a lot on the type of clients the agents work with, a particular agent works with. An agent who works with, buyers who are in that 300 to 500 plus range, most of their people are probably gonna be qualifying. If their business is more referral than online
Internet
lead
leads,
generation,
yeah.
a lot more of those people are gonna qualify, so it depends a lot on their source.
Gotcha.
Make sense?
Because I feel that a lot of times in talking with potential clients and then getting them started with that pre-qual process, it's like you kind of already know.
That's their sense of motivation right there, if they're
Uh-huh.
gonna do it or not, like, yeah.
But
seriously.
you also know
Know whether
just
they can
based on
qualify
what,
or not.
yeah, and this is
Well,
where
here-
sometimes I feel like I'm wasting your time.
Well, and I think you
then-
are, but I get it. Well, but here's the thing, right? You gotta be, this is a fine line, it's tough, because you gotta be careful that you don't try to play loan officer and discourage somebody from applying who could actually
Right.
qualify. I've actually surprised clients, they thought their credit was a lot worse than it was. Most times it's the other way around, but there are a lot of people, a number of people, they pull credit and go, I just did this recently. And like, oh wow, I thought my credit was a lot worse than that. So sometimes you get a good surprise, right? The other thing is this though, here's the one thing I think you can do, which is kind of helpful, is talk to the client about the fact that there are certain obligations monetary in that process. So for example, okay, I just want to talk a little bit about, here's how this process works if we go under contract, right? We're going to write a contract, one of the things we do is we talk about earnest money. Typically we're talking usually around 1% of the purchase price. I think that's pretty much a standard, right? So if you're doing a $250,000 purchase price, you're going to have $2,500 in earnest money. Are you going to have that available? If someone says, well, I only have $500 in my account, I don't even want to talk to them for a grant,
Yeah.
because they're going to be doing lower priced home. The grant's not going to, now, the grants, some of the
And they're
grants we
still
can
gonna have
cover
to come
more
up
than
with
down
some money.
payment.
Yeah.
But they're going to need earnest money. They're going to need inspection money. They're going to need closing cost money. And in those price ranges right now, at least, you're not getting seller concessions.
Okay.
I'm not seeing a whole lot of seller concessions right now. In fact, very little in that 300 and under
Oh, yeah.
price point,
Mm-hmm.
or 350 and under even.
It's too
So-
competitive.
So, some people, and this, it boggles my mind, guys, that some of the people who think they might be able to buy a house, they have less than $1,000 in the bank, they save nothing, they're paying $1,200 in rent. What can you even get for $1,200? At what, maybe $150,000 home, I think, or something like that? I can pull up my little form and show you.
No, I can tell
So,
you.
so the point is, some people just are clueless about what it even takes to even think about buying a house. And that's where you can kind of really weed out the people who just, all of a sudden they woke up and they had this dream that they wanted to be a home buyer. And they haven't even thought about it. No, I'm not joking.
Yeah.
I've talked to clients, it's like, they have no idea what it takes to even begin to buy a home.
And that's where like a lot of our videos and stuff can come in handy, educating people on
Does that make
both
sense?
sides, absolutely, yeah,
Those are the ones I hate wasting my time.
yeah.
No, I mean, I love working with first-time home buyers and who are actually got their crap together. Yeah, I actually deal with some young people who really are
Impressive.
sharp, they've already saved money, and stuff like that. I met with a guy who's 20 years old, going to school, works for a bank, they don't do loans. He was referred to me by somebody, and I met with him the other day, a couple weeks ago. He already bought a house. He goes, I got roommates, they're paying the mortgage. He's 20 years old, going to school and works for the bank.
Good kid.
So, I mean, I was impressed. I go, you give me hope for your generation, young man. No, I'm not joking. And it's so cool, this guy, he had this little notebook. And we were talking about stuff, he'd open it up and he'd start writing stuff down. What are you doing? He goes, oh, I gotta write that down, that's awesome. I told him there's 2 times where you get people's true characters. I think we might have talked about that, when they're drunk, when it involves money. He wrote it down. He sends me an email the other day, 2 weeks after I met, week and a half. He goes, Keith, it was awesome meeting you. He goes, I gotta tell you, the last week and a half, it's amazing how many times I've noticed how money's impacted people. I'm gonna have to share some of these stories with you. It was awesome.
That's cool.
It was amazing. It was really, we're gonna get together again. He was a real cool young guy. Really had his act together. But anyways,
I know we're after time, so, but if you could send out an email or something, or I don't want to keep in everybody, but right now you're mentioning refis, and I know, like with us agents, if we can tackle some and help people utilize the benefits of refiing, whether helping them find another investment property or doing different things like that, how can we jump on these things, or like either
Okay,
work
if
with
you-
you, or like, you know, how can we take advantage of it too? Because that's awesome.
Okay, a couple of things. And this is a good question, and I talked about this Wednesday at Randy Courtney's weekly meeting. There's two things going on here. I keep forgetting you got me on film. Oh, jeez. No, I should have really behaved myself. Look, cut out that part where I was giving you crap about filling out the form right. Don't be lazy. Oh boy, it's gonna come bite me in the ass. Oh, in the butt. If you have helped anybody get in a home in the last year to year and a half, they should be looking at potentially refinancing. The rates spiked about a year or so ago, and now they're the lowest they've been in quite some time. My rate this afternoon, one of Randy's agents asked me what rates were today. And so on a 30-year fixed, you know, with good credit and all that, best, I'm at 3.875 right now.
Oh,
Yeah.
Nice.
The FHA was 3.625. The VA was 3.5%.
Well, it's a big.
That was
figure.
today. I didn't even look at the 15. But I do have a client who was in one of my Tempe Coffee Connection group who left it, and he asked me a few months ago about potentially refining. I just closed him a year or so ago. I actually have to look at the 15, and it came up on my marketing thing today going, this guy might be able to get a benefit of refi. My my CRM system notifies me when, because there's an interest rate in there for their loan, when they might have an advantage to refinance. I got a
cool.
huge list of it. And a bunch of them on the list I've been contacting, and you know, some of them haven't responded. I've actually been doing some of my clients in the last year. That's one way, so to benefit them. But here's the thing, and I think this is something you might want to think about. I think, and I could be wrong, but one of the things, and I think we talked about this a couple weeks ago, one of the things that's caused some of our shortage of listings is a whole bunch of people are in homes with low interest rate loans. And they're going, man, if I sell this thing, I'm gonna have a much higher rate. Maybe I'll just do a little remodel and keep this thing. It's really not that bad. So it might not be a bad idea to say, hey, look, if you've been hesitating to go buy a new home because you don't want to lose the low rate you have on your current mortgage, well, guess what? You might be able to get that same rate today. Something to think about.
Yeah. And is it hard for people to use like can they do a cash out refi, and how difficult is it to take out a cash out refi and invest in another property
How difficult is it?
for your average person? Let's say like
Well,
they have
depends
a
what they
$300,000
have
house.
equity.
Yeah, like
It all comes
let's say
down to equity.
5 years ago they bought a house, paid
Right.
it down. Right now they could be sitting on $100,000 in
Good.
equity.
Now, what we can go up, typical loan to value is 80%, but Freddie Mac came out with a program to go to 85,
Okay.
higher interest rate. And those rates I quoted are not for a cash out refi, they will be probably 1/4% higher for a cash out refi.
That's it.
Yeah, that's all. Okay, yeah. And on a regular refi, well, 3% down it'd be higher. You know, the ones I gave you were basically, it's interesting. The interest rate between just over 80% up to 95% loan to value is the same as 75% or less, but if your loan to value is between 75 and 80, interest rate's slightly higher, by 25 basis points.
Weird.
It is and it isn't. If you think about it, when you have mortgage insurance, it covers the lender down to 75% of loan to value. And so if you're between 75 and 80, you're actually at a higher risk, so slightly higher. Yeah, it's kind of weird. Anyway, but that's what I would focus on, those two things. Or like you said, you know, maybe somebody doesn't want to put a home equity line of credit against their house because the interest rates can go up and all that, and if you lock them, they're more. But if they did a cash out refi now, rates are damn low compared to what they were just, you know, even just a couple, 3 months ago.
Okay.
So,
So is the ability to qualify for a cash out refi on that level, is it basically qualifying for another mortgage? Like
absolutely,
legit,
it's no different.
legit? Okay.
No different. You go by debt ratios, credit scores. I mean, the algorithms look at various factors, right? Cash out refinances are harder to qualify than a regular refinance because you're taking cash out. But that algorithm, I can't tell you exactly how it penalizes you, but you're more susceptible if you have real high debt ratio stuff not to qualify for a cash out where you might be for just a purchase. But it also looks at things like reserves, and the cash out doesn't count towards reserves. In other words, if you could take 100,000 cash out, oh, I got all these reserves once I get done. Well, no. How much you have now before you? Yeah. So certain things like that.
Okay.
But-
Will they count it as like a let's say you're looking at a fourplex? Will they does that affect anything, or is it just a cash out refi?
What do you mean?
Like, let's say they wanna buy, a
Fourplex?
like a fourplex using the cash out refi, how would?
Okay, so let's say, okay, so here's the question is, what are authorized sources of funds for doing a down payment?
There we go.
A cash out refinance is one of those, okay, so secured funds can be used. Secured funds, it's stuff that you own. What does that mean? That means a cash out refinance, that cash came from a secured, it's secured against the property, and you own that property. You can use that for down payment, okay? You can use 401k loans. It's money that's yours, you can do a loan, but it's secured funds. Why? Because you don't have to pay that loan back. And the other thing about that too is a 401k loan, we don't count the payment against them either. Because they could just say, oh, forget it, I don't want to pay it back. And what happens, they pay taxes on the distribution. So secured funds can be used, but you gotta own this secured fund.
Okay.
If you borrow against another asset you own, you can use those for down payments. Look at it that way.
Okay.
Make sense?
So you do the refi and the new loan on the fourplex?
Oh, heck yeah, I'm more than happy to.
And that actually is beneficial, because if you see both sides of it, you could probably help that a little bit, right, on certain sides.
So structured in some, oh,
Yeah.
absolutely.
Yeah, because if you know they're gonna buy a cash flow property, that's obviously a better one to do.
What's really fun is when you're doing, when somebody's doing two purchases at the same time. And I've actually done that. Because now you have to put in the loan, you're doing a loan for this one purchase, but you gotta put in the loan as if they already own the other one. You know, all the debt that it incurs and stuff. And then on that app, you gotta put the other property in as, so you're looking at it as if they already own that other property, even though they're gonna be closing on about the same time.
To offset all the math.
Yeah.
Yeah.
You gotta be able to count, you gotta count both properties as added debt, so to speak.
Yeah.
Even though you haven't even closed on the other property, and you gotta put it in there. Yeah, that's pretty cool.
So I see a huge thing on that level right now, just in general, on both sides.
Well, guys, I know it was kinda long, but
I
you already know I can talk, 'cause last time I did